If you want to start investing in the stock market and you don't know how, this video is for you. In this video, there's going to be a few things that you're going to learn on how to get started, what to do when you already gotten started, and what to do once time has gone by. Hi, my name is Ali Mavis, and I've been on this YouTube journey as far as buying stocks, fractional stocks, doing optional plays, doing safe investing with just a little bit of money. I've been recording this journey since November 13th, 2025. That's not to say that I've been investing in the stock market last year, November 13th, 2025. No, I've just been recording the journey with you guys. Now, if you don't have a broker, that's the first thing you need to get is a broker. I like Robinhood. Yes, there is a lot more other better brokers, but as far as starting out, the basics and everything, I like Robinhood. There's Webull. You can even buy stocks on Cash App, stuff like that. But as far as like utilizing all the weapons that the stock market has to your arsenal, I I like Robinhood. You can go with any other stock market. You can go with any other broker. It doesn't even matter. But I like Robinhood. You feel me? You like Robinhood. Next thing you want to do is you want to realize, hey, how much money can I put away and how often can I put away money? And do not guilt yourself if you're putting away $1. If you literally pause this video, you stop, you subscribe to the channel, you drop a thumbs up, and you go watch my previous videos, you will see, if you actually watch my first video, you will see I literally started with $1. I started with $1. So do not feel like embarrassed or ashamed that you could only put away $1. Because the next question is, how often can you put away that dollar? Can you do it once a week? Can you do it once a month? Can you do it once a quarter? Doesn't matter. There's no shame. I just need you to be able to put money in and figure out when is the next time you're gonna put money. Once you figure that out, the next thing you're gonna want to do is figure out stocks that you like. Not necessarily like, but companies that you're already invested in. Companies that you're buying products or services or goods, right? Like for example, I have here Netflix. Most people have a Netflix account. Netflix right now is worth $88.68. The share value of Netflix is higher than the stock price, but the stock price continues to go up. But the cost of subscription stays flat, and it doesn't give me a return. So it's like there are already companies that you're already invested in. Coca-Cola, whether you like sodas or whatever, this allows you to invest in companies that you don't even have to buy their products and services or goods, but you know it's a name brand, and you know that you can put your money in, park your money in, and your money is going to be safe. So that's really what you need to do when it comes to investing in the stock market. And for those that have been watching me and you know how I roll, you come on now. Let's get into the plays, ladies and gentlemen. So first things first, we got a lot of option plays. We got a lot. We have a few that expire this week. I have an option strategy that I want to go over with you guys, that I believe that if you find the right stock with this right strategy, you are able to make weekly, consistently money. Now, for those who know and for those who don't, I like to buy fractional shares. How do I go about buying my fractional shares? I'm going to give you an example. Here, Nvidia. It's down today. We're red. Nvidia is red. I'm $30 invested, but I'm up $2.32. I would like to say 8% because people are going to be like, oh, you're up $2. Yeah, but look how much money I have. I have $30. If this $30 was sitting in your checking account, would you have made $2.30? But like, I don't know when's the first initial bought fractional share that I bought in Nvidia. But like I said, I started this journey November 13th, right? So we're already in like 7 months in. So if your $30 was sitting in your account for 7 months, would you have gained $2.31? Sometimes you, sometimes like for the internet bullies out there, like that's what you got to put in perspective before you drop a comment, before you drop an ignorant comment. So I just bought into Nvidia. We got some Nvidia. The reason why I only bought $1 is because the price of Nvidia is higher than my average cost. When the price is lower than my average cost, I like to buy more, but I don't like to buy too much when it's higher than my average cost. So that's the first stock we're gonna buy today because the stock is red. That's one of my rules. When the stock is green, I have to be down. Like for example, Lowe's. I am down on the stock. I'm down $2.77, aka 5%. But the price is still lower than my average cost. So what I'm gonna do, what I like to do, is buy 10% of the market value, my position. I like to buy 10%. Why? Because it's going to move my average cost. Watch this. So I'm gonna buy for $5. So we're gonna boom and watch the average cost here. Awesome. So let me actually do this because I just peeped that. Yeah, it's a better setup for you guys. Boom. So that just dropped. We did it for $5, and as you mathematically, you don't have to be a math wizard or anything like that. It's just like investing in the stock market. What you just want to do is just pay attention to numbers. That's all. Like you don't have to. Like I didn't even whip out the calculator. So as you guys can see, my average cost dropped. The price of the stock is still lower than my average cost. But if I continue doing this and the stock is lower than this price, eventually the prices will meet. So, and that means is like the stock doesn't have to rise to the original price of where I got it at. So that's stock number 2 that we bought today. And what we spent $6 thus far. Next stock. Let's see. Down on Lowe's, red. Netflix is down today. We're gonna get $1 worth, not too crazy. Because again, the stock is up. Stock is up, but we're down. We're down, so we definitely want to buy when we're down. Because the thought process is, look, there's 252 trading days in a year. So if I buy all the down days that the stock has, and it has more green days than down days, in theory, I should be up, in theory. As long as those down days weren't like severe and brutal. Another one here, Microsoft. Down today, average cost doesn't go up that much. We still get invested in, we still put money in, we're putting our dollars to work. So that's a great thing. Next one here, what we got? We already got 300 shares of Microsoft. Western Digital's taking off. TNT, we can get some TNT. Deere is about to go red. So let me see something here. How many stocks am I actually invested in? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So I got 11. We're straight. We don't need them more. So we got 11 long-term fractional plays. The long term really doesn't consist of like a lot of money. It's like $300 worth of long term. And what is long term? As you guys can see, those like fractional shares, these are long term plays. These whole shares that you see, these are just short term plays that if you are starting out in the stock market, and the first thing you need to do is you have to invest. You need to invest, and when I say invest in the long term. And when you're investing in the long term, it's boring. There's no real trading. You're just buying, holding, and waiting. You need to have that in place. That's number 1. Once you have that in place, number 2, if you have the capacity to learn other strategies in the stock market, these are some strategies that you might want to take advantage of, especially when you don't have a lot of money. So these plays are just short-term plays. I know how to get myself out of it. I know what I'm doing, and I am showing you guys live, even all the mistakes, even if I lose and even if I win, I'm showing you guys live. So first things first, we are going to explain our options that we have. That way you guys see what's going on. First option we have that's going to expire this Friday is Coca-Cola. It's the $78 strike price. Coca-Cola is at $78.34. So if Coca-Cola is below the $78, I get to keep my credit and I get to keep the 100 shares. The credit is $40. If not, I am obligated to sell that 100 shares. But as you guys can see here, me selling it, I would be up. Not the whole entire thing, of course, because we're up like 35 cents. But we're still up. We're still up. And here's the cool thing. Like, let's say it's at $78.10. I basically sold mine at $78.40. So I kind of beat the market a little bit. I don't mind holding on to Coca-Cola. So if I get a sign, I'm probably going to get back into Coca-Cola, reposition myself. Next one here we have SoFi, which expires this week as well. Another covered call. I'm really down on SoFi. So a lot of this is just recuperation, repositioning, trying to see what I could do, get myself out of this, or just, I don't know, just wait it out. So, this is an example for you guys. Like if you're in a bad situation when you're on a stock that's down, how to think, what you do, relax, stuff like that. If I'm down, eventually I might just cut the losses and just move forward. But I feel like I can recuperate. I have faith in SoFi. I feel like we will get a bounce soon, or eventually my average cost and what I collect will help me ease out of this and get out of this. So first one that expires this week is the 1750. I got $13 of credit. Right now, if I wanted to buy out of it, I would get like $8. But I'm just gonna stay into it because if it does go to 1750, if it goes to 1750, that's fine. I would only lose like $65 on it. 65 minus the 15 I got it, so I would lose about like $50 on the trade, which is fine because that means I would be slowly getting myself out of it. So hey, sometimes you gotta lose or cut a position so you can reposition. Next one, AT&T. This one, guys, I think is gonna be my slow breadwinner. It's gonna be my slow breadwinner. So I got this covered call on AT&T, $26 strike price. I got $28 of credit. It's worth $9 right now. Basically same thing. If AT&T is under $26 at the end of this Friday, I get to keep the 100 shares and I get to keep the credit. This one here, guys, if you waited this long in the video, I appreciate you guys, because this is the strategy that if you understand and if you find the right stock to do it with, oh my god, you're gonna make so much money. So this next one here is Coca-Cola. It's called an iron condor. It's called an iron condor. So basically this is for stocks that don't really move, or they stay in one like price range for a very long time. So as you can see here, Coca-Cola or AT&T, 25.50, 26.27, 26.37, and even down here. So it hasn't like broke out of that range in a week, even like almost a month of time. Look at this, since like let's say 26 to 25, 26, 25, April 13th. Like for a whole month, if you ran this strategy, you would have made so much money. So much money. Look, I'm already up about 45% on my contracts. 45%. So basically, this is what my contracts is. AT&T needs to stay between 25.50 and 26.50 at the end of this Friday. Right now, I can close out these contracts, get my $13, and dip, right? Or I can wait it out and see what happens. AT&T could dip even more. We can dip tomorrow. Everything is depending on what happens. But AT&T is a slow mover. Like, look, we're down 0.8%, 80%, and it's really hasn't affected anything. So iron condors, if you guys want me to do a video on how to do an iron condor, drop a comment down and I'll do a video on how to do an iron condor. This isn't something that's necessarily always going to be available to do as far as a strategy, but if you know it and if you see the opportunity, you know how to take advantage of it. Next one here, this expires next week's Friday. We got the SoFi's 18. Again, if it goes up, cool. If it doesn't, it doesn't. We're playing both sides of SoFi. We're playing the upside and downside. We also have next week's covered calls, not covered calls, credit spreads, call credit spreads. I need it to basically go down. Not down, but stay at the 16 range. If it stays below 16, cool, that's fine. I don't want, like, the reason why I don't want it to shoot up so fast is because I have these covered calls. So I want to collect premium. That way, when it shoots up and I'm beyond like break even, or I'm at break even, I at least made a little bit of money for at least holding on to the stocks. Next thing, let's keep playing with my account, are these call credit spreads on AT&T. If they go down, another one that I'm playing both sides. If it goes down, I will make a good amount of money. If it doesn't, I'll lose about 140 on the play. If I win, it's about like 860. My thought process is, if it does go down, I'm holding on to the shares. That would help me with the losses, plus dividends, plus call credit spreads, plus cover calls, all that. Got another iron condor here for next week. I need AT&T to stay between the range. I might even do another one with you guys here just to show you guys how it's done. We got call credit spreads, puts on SoFi. We bought a call and we got put on AT&T, ladies and gentlemen. So another stock we're gonna buy here is, we're gonna buy some Lowe. We're gonna do it. We're gonna buy 10 shares worth. We're gonna buy 10 shares worth. I should buy just the whole 100 and just protect myself, right? Or just run the play. Or if you run the play, that could be dangerous. No, we'll chill out. So we bought 10 shares of that. We're still gonna build our position for this company. My thought process is buy 10 shares. Once I get to the 100, then we'll do the option play on it, the wheel. Next one's gonna be AT&T. I will buy another 10 shares of AT&T. No regrets. No problem. I know it's going down. Some of you guys are scared to buy stocks when it goes down. So look, this is why you need to buy stocks when it goes down. Look at that. Wow, barely moved. Okay, I like it. Barely moved. I like it. So now we got 170. We're gonna get another 30 shares. We can start collecting premiums and then see where we're at as far as premiums. See how much we collected on spreads and this and that. And then if this thing still keep going down and I haven't recouped or whatever, cool, I'll get myself out of it. But if I'm making profit or I'm profitable as this thing is going down, I will stay in the stock. Like, I will stay in the stock and show you guys you can make money when a stock goes down, and you can hold on to the stock going down and make money. So ladies and gentlemen, thank you guys for watching. Today is Tuesday. I just want to give you guys an update as far as like my personal life and everything. I'm traveling right now. I'm about to head to Ecuador, and then after I head back to the States. So the setup is going to be a little different for these next couple days. I'm going to go back to States and I'm going to Vegas and all that. So I'm be traveling. So setup's gonna be a little different. So those that have been with me, those that are gonna be with me, those are future selves that are gonna be watching this video. If you see the little differences in these upcoming videos, you guys are warned. But I'm gonna do my best to upload as much videos as I can, get you guys updated as far as the portfolio. If I can't get a video out, I'm still making them plays. I'm still doing what I need to do. And yeah, guys, I appreciate you guys. We're almost halfway through the year. Believe it or not, I know we just got into May, but we're literally halfway through the year. So, ladies and gentlemen, thank you guys for watching. Thank you guys for subscribing. If you guys haven't subscribed, please subscribe. I see you guys watching the videos. Drop the thumbs, likes, all that. I appreciate you guys. And if you guys aren't following me on my social medias, go ahead and follow me at Instagram and TikTok at Strictly Financial. And we'll talk soon.